What's up, guys? This is Nick with Nick Does DGI, and welcome to my channel where I cover all things personal finance, stocks, and real estate. In this video, I'll be going over what losing 110 pounds has taught me about investing. This is a bit different from my usual content, and that is really me in the thumbnail. But I hope you find some value out of this. This video is very near and dear to my heart, as this has been one of my life's greatest accomplishments. So don't forget to tap the like button and watch until the end. Let's get into it. If you read the title and was confused as to what losing weight has to do with investing, I understand. At first glance, they'd seem like unrelated topics, right? But through my personal experience with losing 110 pounds in less than a year, I absolutely believe the lessons I learned from that chapter of my life have formed the building blocks to my investing and personal finance principles today. For context, I believe a short background story is in order. I had a love-hate relationship with food. My family went to buffets at least once a week and kept a never-ending supply of sweets and snacks at home. And when New Year's came around, I created the same New Year resolutions to lose weight over and over, yet I would fail by the time it was February. This continued throughout middle school, high school, and until the end of my junior year of college, to a point where my body was physically deteriorating by age 20. I reached an epiphany on that first day of that summer break. If I were to continue living this lifestyle, I may not be around for that long. I had pre-hypertension, social anxiety, and low self-esteem. So I just set one goal, to lose as much weight as possible within the next 12 months before I graduate college. So my journey back in June of 2013 started. I ordered a food scale, downloaded the calorie tracking app MyFitnessPal, and signed up at the local gym that afternoon, and the rest is history. For the next 12 months, I exercised at least once and sometimes twice a day, even if I had midterms and finals. I made sure to play basketball with my friends or fit in a weightlifting session. And on family vacations, I made sure that our hotels had fitness centers. I weighed my foods religiously and counted every single calorie that entered through my body. And it was through this long and arduous process that I lost 110 pounds within a year. And since that journey, I've been able to stay in shape, get into powerlifting, and maintain a healthy, balanced lifestyle. And here are some of my before and after shots. And stick to the end of the video for an exclusive video clip of me squatting 405 pounds a while back. In addition to physical health and cost-saving benefits to losing weight, here are 3 main takeaways from my weight loss journey that are applicable to investing. First, losing weight has taught me to see and appreciate the long-term horizon of investing. Rather than being hung up on day-to-day market fluctuations, remind yourself that these swings are completely normal and expected. And as a long-term investor, you actually welcome market drops so that you can dollar cost average down your positions and buy even more shares. And when you see things with a 30,000 foot view, you get to see the big picture and not get so bogged down in the minute details. As I've mentioned before in other videos, the S&P 500 returns on average 8% annually. But that does not mean you will see an 8% return every year. Some years, your portfolio will be down 10%, or it will be up 10 to 15 in other years. And that's what makes it an average. But by letting compound interest do its magic, your portfolio will be net positive decades down the line as the snowball effect keeps rolling. Alternatively, don't fall for the so-called get-rich schemes. Because of social media advertisements of luxury cars and big mansions, people want to double their money overnight. But people don't understand the risk that you are taking with your money to chase those returns. And as the saying goes, slow and steady wins the race. I too have fallen victim to this. At one point, I had some friends making a killing trading options, so naturally, I was intrigued. I tried my hand at option trading for exactly 1 month before realizing this was not for me. The day-to-day swings with options are on a whole nother level, and I simply wasn't a fan of the risks involved. But with long-term investing, you can become an everyday millionaire by the time you start investing in your early 20s. Second, recognize that everyone makes mistakes, especially in the beginning of your investing career. So don't be discouraged if you invest in a company that subsequently crashes, or if you have missed out on the latest EV or IPO stock gains. Recognize the mistakes, but don't beat yourself up. Think of solutions to make sure it doesn't happen again. For example, earlier in my investing career, I chased a yield. These ridiculous dividend stocks were yielding in excess of 8, 9, or 10%. People told me that chasing yields was a dangerous endeavor and that I would eventually get burned, and they were right. Shortly after, they cut or completely eliminated their dividends due to poor financial earnings. I took it upon myself to do more research, and I came across a strategy called dividend growth investing. Now, if you take a look at my M1 Finance portfolio, I own solid blue chip dividend growth stocks with a proven track record of increasing earnings and growing their dividend year after year. For example, I own 3M, which has been growing their dividends for 62 years. I also own Lowe's. They've been increasing their dividends for 57 years. And I own Procter & Gamble, and they've been increasing their dividends for 64 years. My overall dividend portfolio yield might seem low in the high 2% or low 3%, but I'm confident that I can sleep well at night knowing that my dividend income will increase 6 to 8% annually without fail. Third, mindset over matter. As with many obstacles in life, your mindset will be the determining factor if you will persevere and come out stronger. To have an investing mindset, it is about thinking, planning, and executing to improve your future. As you dive into the world of investing and personal finance, read and learn about other successful investors and entrepreneurs. Just take a look at Warren Buffett. He spends 5 to 6 hours a day reading newspapers and corporate reports. Bill Gates reads 50 books a year, and Mark Zuckerberg reads at least one book every 2 weeks. The learning never stops, for education is a passport to the future, for tomorrow belongs to those who prepare it for today. For the longest time, I was curious about investing into the market, but I was overwhelmed by the finance terminologies and often experienced analysis paralysis, which resulted in delaying my first investment for over 3 years. But one day, in the middle of a gym session, I was overcome with motivation to finally dip my toes into investing and ordered the books The Intelligent Investor and The Intelligent REIT Investor. And through these books, I learned a great deal about passive real estate investing, dividends, and stock analysis by starting to invest in REITs, or real estate investment trusts. So my first stock purchases were actually REIT stocks like O Realty Income and Stag Industrials. And soon after, I learned a great deal about blue chip companies and dividend kings and aristocrats, or S&P 500 companies that have been raising their dividends annually each year by 50 or 25 years respectively. And that's how I became a DGI investor. I definitely made some mistakes along the way, but I was driven to learn from those mistakes and improve. If you enjoy the content, please consider subscribing to the channel and clicking on the bell notification to receive all the latest video alerts. Bye.